Hey guys, I hate to interrupt, but I just wanted to take a moment to say if you're studying for the CPA exams and you like the visual learning approach that we take in this video, definitely check out Universal CPA Review's free trial. You can do this by going to www.universalcpareview.com, or you can click on the link in the description of this video. From there, you could take a sneak peek at Universal's platform, which includes animated video lectures, study guides, and practice questions with task-based simulations that come with video explanations that walk you through the solution step by step, kind of like having a tutor by your side. Okay, enough of that. Let's get back to it.
Okay, so we talked about total comprehensive income at its highest of levels. Now let's talk about other comprehensive income in a little bit more detail. We know that net income is calculated by taking our total revenue items less our total expense items, right? We're calculating income from continuing operations, and then we're going to add and subtract other income items and other expense items to calculate our net income before income tax. After we include our income tax expense, we're going to calculate our total net income. Okay, fine, but what are we going to include when reporting other comprehensive income? When we calculate other comprehensive income, we need to remember our PUFIE mnemonic. Okay, so when you think about OCI, you're thinking about PUFIE. So although mnemonics are used specifically as a memorization strategy, we never want to purely memorize our way through the CPA exam, regardless of what section you're studying for. This is a strategy that never typically works. Some people get lucky, but it is not a strategy for you, let me tell you. Okay, so there's just too much information here. Never can your attitude be, okay, I know the 5 elements of other comprehensive income. Boom, I'm done. I don't need to look at this again until my final review. That is not going to be good for business, okay? Because the reality is all 5 of these elements that we're going to talk about are going to be revisited time and time again throughout the remainder of this course. Okay, because it's not about just knowing this and how it is classified. We also need to know how this is going to be valued. And when it comes to the calculation or the valuation of each of these line items, we're going to dig into these in their own separate module later on. Okay, let's do it. We're going to talk about one of our favorite mnemonics. This is the PUFIE mnemonic. So when you think about the PUFIE mnemonic, you're going to think of this more so as an index. Okay, so once you fully understand all 5 of these elements as you go through this course, this is going to be something that you could refer back to when you're thinking about how these items are getting reported. Okay, so the PUFIE mnemonic is going to start with the F, which stands for foreign currency translation gains or losses. So let's say that Joey's Pizza has expanded to the United Kingdom. All right, so they're killing it out there, but they're bringing in the British pound, not the US dollar. So if Joey's Pizza is presenting its financial statements in the British pound, they're going to be translating it to the US dollar. So that foreign currency translation results in either a gain or a loss. So that gain or loss is what is going to be reported in other comprehensive income. Okay, so the F in our PUFIE stands for foreign currency translation gain or loss. Okay, next up we have the U in PUFIE. Unrealized gain or loss from available for sale securities is the U in our PUFIE mnemonic. So let's say that Joey's Pizza buys some debt securities on the open market. These debt securities are going to be classified as available for sale securities, right? They're not trading securities because they plan on hanging on to these in more of an investment capacity. Okay, so they're not classifying these as held to maturity either. They're classified as available for sale. So what is the difference between an unrealized and a realized gain or loss? So a realized gain or loss is the actual profit or loss from an investment. Okay, so that investment has been sold and the gain or loss is going to be realized. Whereas the unrealized gain or loss should be considered more so as this hypothetical gain or loss, right? So if we sold this today, a gain or a loss might result. So an example of this could be Joey's Pizza Shop buys debt securities classified as available for sale for $5,000. And at the end of the year, the debt securities go up to $6,000. But Joey's Pizza Shop decides they don't want to sell these securities because they think it's going to go up to $10,000. So they don't sell it, they hang on to it. But US GAAP says that we need to report this $1,000 increase in its fair value. Okay, so that $1,000 amount is going to be what's reported as an unrealized gain in other comprehensive income. With that said, it's going to be unrealized gains or losses. So if this debt security went down to, say, $4,500, Joey's still not selling it because he thinks it's going to go back up, that $500 loss is an unrealized loss. And this is what would be reported in other comprehensive income as well. Okay, so keep in mind, they love to try to trick you by saying that this is a trading security. So unrealized gains or losses from trading securities are not going to be reported in other comprehensive income. They're going to be reported in net income. It's only unrealized gains or losses from available for sale securities that will be reported in other comprehensive income. This is the U in our PUFIE mnemonic. Okay, so we're going to talk a little bit more about debt securities later on in this course. And that's what I say when I mean we got to use other comprehensive income and our PUFIE mnemonic as an index to refer back to. Because when we dive into the nitty-gritty of our trading securities, our available for sale securities, our held to maturity securities, we're going to reiterate the fact that these are going to be classified somewhere in the financial statements. And you're going to be kicking yourself if you're blowing me off right now, right? Regardless of how tempting that might sound, because this is something you're going to be happy that you remembered because you were paying attention to it today. Okay, so once again, unrealized gains or losses from available for sale securities going straight to other comprehensive income. Okay, so the P in our PUFIE mnemonic is going to stand for pension adjustments. Okay, so we're going to get into pension adjustments made a little bit later on in this course. But for now, we need to understand that pension adjustments are going to be reported in other comprehensive income. All right, so here what we're saying is that if an adjustment has been made to a pension plan, which could be things like changes in the funded status of that pension plan from a gain or a loss, could also be the recognition of prior service cost adjustments or net transition assets or obligations. What we need to know is that these adjustments will be recognized in other comprehensive income. Okay, so essentially what we're saying here is before these adjustments are recognized in what's referred to as the periodic pension cost on the income statement, they're going to be sitting in this accumulated other comprehensive income account. Okay, so before they are eased into net income as a periodic pension expense, they're going to be reported in other comprehensive income, and then temporarily they will sit in accumulated other comprehensive income. All right, but as we said, eventually they will be transferred over to the periodic pension cost. Okay, so other comprehensive income and then accumulated other comprehensive income until told otherwise. The I in our PUFIE mnemonic stands for specific credit risk. So essentially what we're talking about is if Joey's Pizza has a strong credit rating and maybe they fail to pay back some debt and their credit rating drops, the resulting decrease or increase in the fair value of that credit rating will be recognized in other comprehensive income. So I'm going to be honest with you, this one is not typically tested as much on a conceptual level on the exam, but we do need to know that this is reported in other comprehensive income. And finally, the E in our PUFIE mnemonic stands for the effective portion of a cash flow hedge. So what's important to note is that it is the effective portion of a cash flow hedge that will be reported in other comprehensive income. If it is considered an ineffective cash flow hedge, it would be reported in net income. So if you're completely confused, just hang tight. We're going to talk about this a lot more when we get into our derivative lecture. But know for now that it is the effective portion of a cash flow hedge that would result in either a gain or a loss that would be reported in other comprehensive income. Okay, so walking through a quick example, Joey's Pizza is calculating other comprehensive income in the current year. The company had the following transactions and events. Okay, so something like this has multiple choice question written all over it. We need to be able to identify what is reported in other comprehensive income. Okay, so we have gains from a cash flow hedge. It says that it is the effective portion. That is going to be reported in other comprehensive income. The E in our PUFIE mnemonic is the effective portion of a cash flow hedge. All right, what about the U in our PUFIE mnemonic? That stands for unrealized gains or losses, but unrealized gains or losses from what? Unrealized gains or losses from available for sale securities, not trading securities, available for sale securities. So the $750 unrealized gain from trading securities would be reported in the income statement under net income, whereas unrealized gains from available for sale securities, right, this $1,500, would be reported in other comprehensive income. All right, and finally, interest expense, not going to OCI, that's going to the net income calculation. All right, so at the end of the day, it's just the $7,000 from the effective portion of the cash flow hedge. Okay, so that gain from the cash flow hedge, plus the unrealized gain from the available for sale security. All right, so 7,000 plus 1,500 gives OCI an amount of 8,500. Now keep in mind, if they ask for total comprehensive income, it would be all of these, right? Because all of these are reported somewhere in the income statement, either under net income or OCI. And we know that total comprehensive income is the summation of net income and other comprehensive income. Okay, so we got to remember our PUFIE mnemonic. Don't you forget it.